As an individual stock market investor, one of the best things that you could do is to leverage tax efficient investment accounts. Without a doubt, one of the best investment accounts that you can have is a 401k. In this video, I want to share with you what a 401k is, but most importantly, provide you with the specific frameworks and strategies that you can apply right now so that you can reap the rewards of this investment account and grow your wealth over time. Okay, so to start off, we're gonna talk about what a 401k plan. So a 401k plan is a defined contribution tax advantage retirement savings plan that is sponsored by your employer. And I'm gonna give you more details as to the different types of 401k plans that you can have and what this means in terms of actual dollars and cents. Okay, so let me explain to you the value of a 401k by first showing you what investing is like if you don't have a special tax savings account. So in this case, we have that somebody's income is $100,000. And just keep this in mind, these numbers are very simple and this example is oversimplified, but this is just to show you the principle. Let's say your average tax rate is 35%. So in that case, the income that you get to take after taxes is $65,000. Out of the $65,000, you do decide to invest $10,000, and then eventually you sell those investments for $15,000. So that means that your gain, because you have to pay taxes on any gains that you made, so the gain is $5,000, the difference between 15 and 10K. And from that gain, you have to pay taxes again. So in this case, we're gonna keep, let's say that the tax rate is still the same. So after tax, you only get to keep this money from your gains. So the 10,000 plus 3,250. And if you look at it, you paid quite a bit of tax. And the reason why is because you had to pay taxes on your income and then you had to pay taxes on the gains that you've made on your investments. Now with a traditional 401k, you can see the numbers right here on the right. So you're still making the same income. We're gonna assume that the average tax rate is the same. The difference here is this. So rather than getting taxed on the $100,000, because you're contributing to your 401k plan, what's gonna happen is that you're gonna take the $100,000 and you're gonna subtract the contribution that you're making. So in this case, that is $10,000. So now what essentially is happening is that your taxable income becomes $90,000. So if you look at the formula, you see how this works. And as you can see, you get to take more income after you pay your taxes because you have technically a lower taxable income. The same thing happens here. So you invest the 10K, but now this goes straight into your 401k. You still sell for $15,000. And so your gain after tax, this is the real question mark. And the reason why is because with the 401k plan, you don't pay taxes right here. You pay taxes once you take out the investment money that you've made. So this could be in 5 years, 10 years. There's different time periods. Once you sell those investments, that's when you have to pay taxes. And at that point, because your income may not be too high, you can have a 30-25% average tax rate for your income. And so you end up paying less taxes altogether. But as you can see, the difference, it's quite drastic, especially if you look at bigger and bigger numbers. Now, another type of 401k plan that is often used is the Roth 401k plan. So this essentially works just like this option. The only difference is that here you are getting taxed the big amount here, but the difference is that you do not have to pay any taxes on your sold investments. You only have to pay taxes here. So in this case, you invest in 10,000, sold for 15,000. Your gain after tax, the difference is that you're not going to get taxed. So in this case, your gain is going to be exactly what you sold for. So in that case, you're only you're going to be getting the 15K straight, and the amount of taxes is only what you pay on your income. And so the difference here is that in this case, we were looking at $35,000 in total tax paid, whereas before we were looking at $36,750. The question then that comes up is, how do you know which investment account to choose? And the answer for that is simple. You can just follow the golden rule, which in this case is that if you make a high income and thus you pay a lot of taxes, it is best to choose a traditional 401k. So if our income was very high, and again, you can look into what those numbers mean. So let's say greater than 150,000 or 200,000 or 300,000, then it is best to go with a traditional 401k because you can directly subtract from your taxable income. But if your income is not very high, but it's likely to increase in the future, then a Roth 401k is a good choice. So this also means that generally older people are going to be better off investing in a traditional 401k versus younger people that are just starting out in the workplace are probably better off to invest part of their money into the Roth 401k because this is the most tax efficient way. Another question that comes up is, how do you decide how much you can invest or in otherwise contribute to your 401k plan regardless of the account type that you choose? So this number changes all the time. I'm gonna leave a link in the description that's gonna give you the most updated numbers. But at the time that I'm recording the video, if you are age of 50 or older, you can contribute up to $26,000 annually. So this could be $26,000 and you would be okay according to the law. You could not contribute more without having to pay penalties for it. That's the only thing that you do need to know. Now, if you're under the age of 50, the amount that you can contribute or invest decreases a little bit. So in this case, you can only contribute up to $19,500. Now, the other question that comes up with 401k investing is like, okay, I want to invest, I want to grow my wealth over time. I want to get my money to work for me and I want to do it in a tax efficient way. So therefore, I'm going to start investing in my 401k plan. But how do I invest that money? What do I do with it? And there's many different options that are provided to you, but some of the most typical things that people do is to invest in either stocks, mutual funds, ETFs, or you can also invest in bonds as well. Something smart that you can do is to allocate a portion of your investing into the different parts, into the different options that you have available. So those main options again are stocks and bonds. So a good rule of thumb that you can follow is to take your age. So let's say that you're 30 years old. And in this case, what you're going to do is you're going to subtract, take your age minus 100, and that's going to give you the percentage that you should be investing into stocks. So as you can see, that would be 70%. And obviously 70, in this case 100% minus 70, that gives you 30% into bonds. And the good thing about this is that as you get older, you generally want to take more risk. So as you get older, you generally want to take lower risk. So as you can see, as the age changes, there's a higher percentage allocated into bonds, which tend to be safer and better for people that are getting closer to retirement. If I'm 70 years old, as you can see, most of the money should be in bonds and then a percentage in stocks. And you can always constantly change the proportions and rebalance your portfolio accordingly. Now, let's say that you're a little bit younger. So in this case, let's say 30 years old. In this case, this is a good rule of thumb, 70% in stocks. What you could do here is, let's say that you want to invest $10,000 every year into your 401k plan. So in that case, what you're going to do is you're going to take this times the $10,000 that you're going to invest. So in that case, you're going to invest $7,000 into stocks. You can further break this down into different types of stocks. So you could say, out of the 7,000, I want to invest 50% into growth stocks, 40% into safe stocks, etc. The last thing to think about when you have your allocation percentages ready is what specific securities or assets are you going to invest in. So typically these are some of the funds and bonds that are most common in 401k portfolios. So you can check some of this out. You can go on Google, type in the different names, and it will give you a whole bunch of stats in terms of like the historical returns of these different funds. Here using white sheets you can get information such as the name, the price, dividend yield, and we're going to be adding some more stuff later on, like expense ratios, so that way you could pick the funds that make the most sense based on different criteria, like the dividend yield, the price, past return. We already have that information. And then in the future, the expense ratios, so that way you can pick the absolute best funds for you. So if you're looking to take that approach, highly recommend that you use white sheets because it allows you to get all this data right into Excel. So that way you don't have to go Google, copy paste the values for every single fund and company that you analyze. We have a whole bunch of videos that you can check out on our channel that are going to show you exactly how these functions work and how you can get the highest value for this tool. Now you know all the essential things that you do need to know as a beginner when you're looking to invest in your 401k. If you've enjoyed this video, make sure to subscribe and turn on the notifications on so that way you get notified every time we release a new video like this that's gonna allow you to take your investing game to the next level. I'll see you in the next one.